Boy, that time flies when you're having fun. It's about that time of day again here, folks. My name is Joseph. It's Wednesday evening. It's January 16th, 2019. And of course, this is your nightly newsletter. You know, I help new traders just like you earn consistent profits every day in our trade room using a simple 3-step trading strategy. And my goal tonight is to find the best, most reliable, profitable opportunities setting up for tomorrow, Thursday's trading session. And tonight we're going to cover crude oil. We got the S&P, got some Nasdaq, we got some gold, and of course we'll wrap up tonight on that mighty euro. Now, taking a quick look around the block here tonight, starting off tonight on oil. Oil is obviously a bull market right now, but right at the top of this trading range, right? You'll notice we're right up around the top of that trading range. Now, normally, I would say let's sell off of this high right now. Buy low, sell high in a range-bound market. But we've got a really strong momentum move going higher. And anytime momentum is this bullish, I always have to try at least take a nibble to buy at support. So I got a couple opportunities here to buy, one in a short-term pullback and one in a long-term pullback. And I'll give you a clue. It's using that big support trend line coming off the low of that chart. We're going to dig into this much deeper here in just a moment, so stay tuned for more on oil. How about some S&P here? S&P is also a range. Interesting chart on the S&P tonight. It's obviously a range-bound market. What's really nice, though, is we got this big bear, right? This big bear channel. And, of course, tonight I'm going to talk more about why that channel tells me that we'll probably get another leg lower before we can get that buy going right back up into that range. So we might get 2, maybe 3 different opportunities here on the S&P in the short term, and then possibly a big rally higher to finish up tomorrow's session. We're going to grab the S&P in just a moment here as well. How about some Nasdaq? Nasdaq, ooh boy, Nasdaq, quite the, well, look at this chart, right? I mean, look at this chart here. If you take away all the drawing tools on here, it was quite a messy session today on the NQ. We're range bound. Yeah, there's a little range in there somewhere. We're going to come put it all together here in a moment. But as you can see, though, a lot of bearishness right now. And we got that trend line coming down. I know this is going to sound crazy, but I kind of want to buy this Nasdaq tomorrow morning, and because we're at the low of this range right now, and I'm going to give you some key points and some key things to look for tomorrow in just a few seconds here. So stay tuned on the Nasdaq. I know, I want to buy it tomorrow, so don't hold it against me. I'm going to show you why here in a couple seconds. And then, of course, over on the gold, same range we talked about from last night's newsletter. And, of course, I want to sell the high of this gold market. And I'm trying to combine this big trend line coming down along with this little tiny trend line here. The big problem is we got this huge bull momentum to finish off today's session, and that's going to try to send this price higher. I'm looking for a couple key components to see if they fail so I can dump this thing right back down into that range and maybe get a chance to buy off of that low. We'll put the plan together here in just a few moments here as well. And then over on the euro obviously bearish overall on that euro, but of course you can see we got that range here on the euro. And of course with that range, we're going to buy low, we're going to sell high. I'm going to give you opportunities here on both sides of that range tomorrow, whether you want to buy it or you want to sell it, right? I've got a pretty good plan here for the euro as well. So we got crude, S&P, Nasdaq, gold, and of course euro. We're going to break all of this down here in just a few moments. But before we break it down and get this party started, I need to remind you, make sure you join our mailing list, right? Make sure you don't miss another video, right? I'll send you an email every time I publish something new here at our blog at Sideways Markets. All I need is you to join my mailing list, give me your name, your email address, and then hit that big subscribe now button. Confirm your email by checking your email, and I'll start sending you an email every evening with the best of the best stuff that we do here every day at School of Trade. It's also important, number 2, tomorrow morning we'll be opening up our trade room at 8 o'clock Eastern Time. If you're not going to be with me tomorrow in the trade room, the next best thing is to grab all the charts from tonight's video. I know, how easy is that? All the charts that I've worked tirelessly here today in the office. It took me a little while. It wasn't that long, right? But all the charts I'm doing here tonight for you guys. You can download them all. There's a big button right below that video. Grab that big button, right, and download those charts. Again, if you can't be there with me tomorrow in the trade room, next best thing is to have all the charts ready for tomorrow. And don't forget, too, if you have any questions about anything we cover in tonight's video, you can always call that toll-free number. You can always use that live support tool. And don't forget, drop me a comment in the comment section with whatever questions you might have. I love questions. I love feedback, right? I love new ideas for new videos. So if you got any questions, any comments, or any other videos that you'd like to see me do here on my YouTube channel, give me a comment in the comment section. And while you're there, make sure you subscribe to our YouTube channel. And of course, give me a thumbs up, right, if you like the video so far. All right, let's jump right in. We got a busy night here tonight and I appreciate all of your time. Let's start off by jumping in here. Yeah, it's still raining out there right now. We just lost power here for a half an hour in LA. Crazy times we live in. That's all right. We definitely need it. Tomorrow is Thursday, January the 17th. What do we have here on the schedule for tomorrow? What's the plan here for tomorrow? Well, as you can see, we got a whole slew of news here tomorrow, all coming out at 8:30 Eastern time. So everything's popping tomorrow early in the session, right? 8:30, we got jobless claims, we got housing starts, and of course, we got that Philly Fed survey. Now, of course, there's a ton of news here at 8:30, but I'm going to tell you the same thing tonight that I told you last night. Most of the price action right now is coming between 9:30 and 11:30. So even though we do have a lot of news tomorrow at 8:30 Eastern time, careful in the overnight session. It's been pretty slow in the overnight. And again, be expecting that window tomorrow between 9:30 and 11:30. That's where we've been getting our best trades over the past few weeks, and we're probably going to see more of that here tomorrow. Got some big news tomorrow, though, at 8:30 Eastern time, so keep your eyes open for that. I hope I'm wrong. Hopefully we get some big reaction to that news tomorrow morning at 8:30, and hopefully we get a nice big explosive move off of there. But if we don't be surprised if things sit quietly like this morning. Again, 9:30 to 11:30 tomorrow is where we've seen our best opportunities the last couple of weeks, and we do expect to see more of that in tomorrow morning's session. Speaking of tomorrow morning's session, don't forget we get together every morning in our trade room, 8 o'clock Eastern time. We're going to put the plan together right now, and then we're going to execute that plan together with all of our advanced members. All right, starting off tonight on the oil market. Survived the inventory report. I see all of my fingers and toes still intact after that weekly inventory report. We got 3 big clues here tonight. 1 is bull momentum. 2 is the trading range. And 3 is that support trend line coming up from below. First things first here is a bull momentum. What does bull momentum tell us to do here? Anytime the market has a bullish momentum, it tells me to buy at support levels. And of course, some support levels that I've got on the chart right now, I've got a little tiny spike in channel here. I'm going to be looking for buying opportunities off the low of that channel tomorrow. A little nibble there. We'll talk more about that in a moment. And of course, I mean, how can you miss this big, beautiful rising support trend line? I'd love to use that as a key level of support as well. So we got bull momentum. Bull momentum says buy at support. I've got 2 levels of support there that I've identified for you. We'll dig into those in a second here, right? Second big clue tonight, right, is the trading range. Now remember, anytime we have a range, first step is to find the range. Second step is there any bias? Yes, there is. There is a bull bias. What does a bull bias tells me? It tells me to buy below the low of that range, right? That's what a bull bias to a trading range tells me. Then third thing on a trading range, number 3 on a range, says take the size of that range, copy and paste it down, that will give me support. Copy and paste it up, that will give me resistance, right? There's actually 4 things for a range. What's the 4th one? Buy low, sell high, avoid the middle, and 2-try rule, right? Buy low, sell high, avoid the middle, 2-try rule. What does 2-try rule mean? It means we go down once, twice, back up. We go up once, twice, back down. 2-try rule. Buy low, sell high, avoid that middle, and focus on the 2-try rule. Now, Third big clue, right? Third big clue is this support trend line. Support trend lines are great because they allow us to buy nice and low. And the reason why that's one of the big clues here tonight is because it lines up beautifully here with the low of that trading range. So put them all together. We got a bull momentum, a trading range, and that key support trend line. What does that tell me I want to do? I want to buy at support, right? I want to buy the low of the range if at all possible. And I want to try to use that support trend line tomorrow if we get the opportunity. Now, most important clue right now is this recent strong run higher here on crude. Let's get this a little bit tighter here for us. Let's get this tighter here. There we go. Give you guys a better view of this chart here. All right, so first of all, nice strong bull run here, right? Nice strong bull run coming out of lunch. Nice big push higher here, almost up to that range expansion. Anytime I see a real strong move in one direction, I know we're probably going to pull back and do it again. And so what I'd like to do is combine the low of this spike in channel to capitalize on that second leg higher. So that's the first thing I'm looking for here tomorrow. And to do that, I'm going to look for basically the same type of pattern that we saw on the most recent pullback. Now watch how this pattern goes. We go up, we pull back, and look closely here. The sellers try once, the sellers try twice, and they fail. That's a variation, a very small variation of what we call the two-try rule. And because of this range, we know two tries are going to be a pivotal part of this. So tomorrow morning, I want to see us pull back. I want to see us hold the low of that rising support. The moving average will be right above it. And I'm going to look for what I call a nested two-try, right? That means one try off the moving average, two tries. Once I see those bears trying once, trying twice, yep. I'm going to look for that buy now, going back up to retest the high, right? What do we call that? We call that a two-try failure pattern, right? And it's a slight variation of it, which I call a nested two-try. That's the first opportunity I'm looking for here tomorrow. Now, if we don't get that response off the trend line here, if we do pull back, right? Let's say we pull back all the way to the low of that range. Now remember, anytime we see a strong move in one direction, we're probably going to see another leg lower. Look back here, for example, right? Strong move down. What happens? Strong move. We see another leg lower. That's fine. That's exactly what I want to see. Because as soon as those sellers give up on this, look what happens. It goes big move down, second leg, and then right back up, right? That's exactly the same thing I'm looking for over on the opposite side now. I want to go down. Let those sellers sell off that moving average. Let them try again. Once I see now I've got that number one, number two, right? Just like back over here, number one. Oh, come on, Joe. Number one and number two, right? Then I'm going to look for that nice strong signal. Once I get the signal that we're looking for, and we'll talk more about the signal inside of our trade room tomorrow morning, I'm going to look for that buy going back up. Now, one more pattern though. After we get that strong move back higher, what I can now do is I can mark up that previous high right there. See it right there? That previous high. This is just an illustration right now. Tomorrow it'll be a real candlestick, right? And then I can buy that pullback, right? Moving average will come over and I can buy that pullback. Okay, so basically this basically is a failure pattern, right, into a pullback pattern. Okay, so we've talked about three patterns here so far. One is going to be that nested two-try, right? We pull back to the low of the spike and channel. It's a one, it's a two, it's a buy back up, right? Bears try once, bears try twice, and we're buying into their stops. That will complete most likely the measured move, right? Which will be our target up top. Okay, I always leave a runner, by the way, so I will leave a runner, right? But the big target's going to be the measured move. And then if we do get that break lower, right, we'll let that move go lower. We're going to wait now as it goes lower here. Let those sellers try a second time. That will create the one, the two. Once we have those sellers trying twice, now we know where their stops are. Right? If I'm a seller, my stops are hanging out right above those highs now. And once I see where those stops are now all I need is a good signal and I can buy now as the price goes higher, right? We call that a failure pattern. Then I don't want to chase after the market going higher, do I? I don't want to chase after it. I'm then going to look for that pullback, right? And that pullback will typically come right about that same swing. The moving average will come over, and we'll look for that rally higher from there using a pullback setup. Okay, so nested 2-try, we have a failure pattern, and of course, we got a pullback pattern. Now, there's one more pattern here I'm looking for tomorrow, and that is a 2-legged pullback. Let's say, for example, here that we get a 1 leg down, a 2nd leg down. I'm going to draw a trend line right on top of that leg there. What's going to happen now? Let them try twice, 1 and 2, and then we'll try to, here's the thing, use that trend line as support on the opposite side. I call this a 2-legged pullback, or a 2LP for short, right? Pretty clever, huh? So again, most important thing though is let them try once, let them try twice, and then get up over that trend line, right? We can use trend line on the opposite side. So guys, we've talked about 4 patterns so far, right? All what? It's all one thing in common, right? All buying at support. Nested 2-tries, 2-legged pullbacks, failures, right? And of course that hidden pullback pattern, right? As we go back into that range. I'm going to keep going. I'm going to talk more about breakouts and reversals here right now. But if you want to get a deeper dive into all my favorite patterns, what I'll do is I'll put a link up top to one of my prized possessions, my free trading class. So that little link pop up right there. Grab that link. It's okay. It'll pause the video. I'll also put a big red button here right now below the blog. Right? If you're on the blog right now, below the video on the blog, look below the video and you'll see a big red button down there to allow you to register as a new member of our free trading class. That'll take you behind the scenes in our members section here at School of Trade, highly coveted right spot there, and we'll give you all the details of my favorite patterns. Not only will I do that, I'll also shoot you an invite to come join me in the trade room as a guest. So grab that free trading class if you want to learn more. In the meantime though, what would a sell off of this high look like later on, right? So we've talked about buying this thing now, buying off the low, right? Buying off the low. What would a sell look like as we go higher here? So let's just say, for example, we get this price up around that measured move. We make our money on the way higher here, but now we're at the top of the range, right? I don't want to buy up here anymore. I'm not buying up here anymore. No way. Now I want to be a seller. Because now we're going to have 1 try for the buyers. We're going to have 2 tries for the buyers. All right, so how do I get short? Well, because of that bull momentum, I need to get short very carefully or very patiently. I'm going to let those buyers try to buy the first pullback to the moving average, right? That's the first thing. I'm then going to let them try again below the moving average. And then once I see these buyers try once, try twice, then we'll start looking for that sell going back down in. And do you remember last night, right? That little trap we talked about last night. So again, let's say we go up, we finish off this move higher, and then we see the 1 and we see the 2. And remember that trap I talked about last night in the newsletter? That little nested 2-try trap? Bingo. That's the goal, right? That's where the money's made, trying to fade these moves going back off the high of this range. Again, because it's a bull market, right? Because that momentum is bullish, I don't want to just sell the high of this range. I want to make sure I wait for those buyers now, let them try once, let them try twice, and hopefully we'll get that trap high and we can sell it back down as a counter trend move back down to retest those lows. Now, what does a breakout look like? Right? How do we know at what point tomorrow, bull market, how do we know when the market breaks out? Well, remember, I'm going to take this trading range, right? There's that trading range we talked about. I take the range expansion, right? Take the size of that range, copy and paste it up, copy and paste it down. It creates these range expansion levels. Now, these range expansion levels are important, right? This is key resistance here overhead, right? That's key resistance. So in order for me to be confident about a successful breakout, I've got to get through this area. What I'm looking for is a little pattern that I call a 1, 2, 3 breakout, right? And it's just like the name suggests. First, I want to see a 1. Second, pull back to the moving average. And third, I want to see a nice break higher. So it's not enough to just see that first leg going higher. I want to see that pullback, right? That pullback to the moving average. Got to touch the moving average. Once I see that pullback to the moving average, then I look for number 3. The 1, 2, 3 is that strong break higher. Once I've got that strong break higher, I'm going to mark up that swing. I'm going to mark up the new channel. And that tells me where the sweet spot is. Right at that prior swing, right below that channel, that's where I'm looking for, right, that pullback now. And I'll wait for that pullback, right, and we'll look for whatever patterns we can get our hands on there. Seller failures, pullbacks, right, two-try rules, et cetera, et cetera. We'll know more about that tomorrow. We'll obviously set that up tomorrow morning in our trade room, and we'll see what we get here for a breakout. So we've talked about the buy side, we've talked about the sell side, and we've even talked about what a breakout looks like. Just make sure you don't try predicting those breakouts because these ranges will hold strong. Let's keep going. Got a lot more to cover here tonight. We are just getting this party warmed up. Over to the S&P tonight here. 3 big clues. 1, bull momentum. 2, trading range. And 3 is the bear channel. Now, biggest, most important clue here is the overall bullishness in this market, right? Overall bullishness in this market tells me what? What does bull momentum tell me to do? It tells me to buy at support levels. Now, where could I find some support levels? There really aren't that many on this chart outside of the range, right? That's my second clue. Where can I find support levels? Well, I can take the size of that range. I can copy and paste it up. That creates resistance. I can copy and paste it down. That creates support. So there's a big support level down around 2609. Okay, what other support levels do we have here? All we got is the swings, right? Swing low, swing low, swing low. There aren't any rising support trend lines. I mean, there is going to be potentially, kind of like a hidden channel down here, but it's honestly, it doesn't look very good. It doesn't look very good, but not a lot of confluence and other levels here. So I don't think that hidden channel is going to be much of a proven channel here for us. So the most important support levels right now are really all around the range. The range low, the range expansion, right, and these prior swings. Okay, what does a trading range tell us to do? First, define the range. Second, define the bias. Third, find the range expansions above and below. And fourth, buy low, sell high, avoid the middle. And what was that rule again? The 2-try rule, right? 1, 2, back up. 1, 2, back down. Same thing we talked about in last night's newsletter. So now that you know the basics of a trading range, we know we want to buy low, right? We know we want to buy low going back up into that trading range. But there's one very important clue, and that is the third big clue, which is the bear channel. Now, if you're a client of mine, don't cheat. You already know the answer to this. But what does a bear channel tell me? A bear channel tells me that the odds are very, very good that we're going to go up and then retest that low. Okay? That's what a nice, well-behaved channel tells me. For example, nice bull channel goes higher, right? We retest that high. But here's another example, right? Sometimes we get a bear channel and sometimes it doesn't retest the low. Now this sets up for another option for tomorrow. Look what happens. The bears tried once, the bears tried twice. There's that 2-try failure again. And look what happened. It jumps up and rallies and retests that high. So something tells me I've probably given you enough so you can probably finish my sentence right now. What does that bear channel tell me? The bear channel tells me that I either need to, 1, wait for the next leg before I start looking to buy this sucker, or 2, I'm going to have to wait for the 1, the 2, and then buy up from there, right? That sounds pretty good. That's pretty easy. Okay, good. So we get a bull momentum overall, right? Overall, bull momentum says buy at support. I'm right at support right now. Support there, support here, support here. Again, usually there's like a trend line coming up here, but again, the trend line's like that. So it's not really very effective. That trend line's not going to help us out very much. The key here is this channel, because this channel ultimately is going to help us time our entries here to get long here off of this low. I want to buy the low of this trading range. So here's one option to consider tomorrow. This is what I hope we get. I hope we get the next leg lower and give us a nice strong run down. Because now if we can get that next strong run down, now there's more meat on the bone for us. Now there's more profit to make as it goes back into that range. You know, one of the secrets of trading inside of ranges is actually not even trading inside of the range. It's get the heck out of the range. You know, I always tell my clients, right, the best thing you can do when you see a trading range is wait for the market to get the heck out of it. Because when it gets out of the range, chances are eventually it's going to go right back into it. And when it goes back in, I can take a small amount of risk for a nice big amount of reward. It really gives me a lopsided 1-to-3, 1-to-4 risk reward ratio. So it's a great setup, but we got to get out of the range first. So what I'd like to have happen tomorrow is to get that next leg. Now, if we can get that next leg, that will qualify as a 1-2. 2-try rule always applies to a trading range. But then that still doesn't fix the problem here that we're still very bearish, right? I mean, this is at that point, if we get another leg lower, everybody's going to be thinking this market's bearish. And what that means is if I try to buy this, I might get run out, all right? Because we might come up and we might see more sellers just jump right in and sell into it. So how do I prevent that from happening? How do I increase my odds of success? I use that nested 2-try. I let the sellers try once. I let them try twice. You know, think of this now almost like a little inside, right? 1 and 2, and then I'm going to buy going back up. And again, as we talked about in last night's newsletter, I'll always be looking for that trap, right? The little trap low as we go up, right? So now you've got your 1, you've got your 2, and you get that little trap low. Beautiful opportunity to buy off of that low, right? Beautiful. And then maybe we get lucky and we get a trend line coming down, right? And we can use that trend line as support, right? On like a 2-legged pullback. So we'll be watching for that scenario tomorrow. So the first scenario is going to be we complete this next leg and then we look for the nested 2-try. The 1, the 2, and then back up we go. Okay, keep your eyes on that. Now, another option here, which we saw earlier, right? Earlier in the session today, we saw a strong move down. And then we saw the bears. They tried once, they tried twice, and they failed and went up. That is also an option for tomorrow as well. The only problem you're going to have tomorrow is that high of the range. Okay, so you really want to make sure if we go back into this range right now, once, twice, promise me you're not going to buy up here, right? You don't want to buy the high of that trading range. You want to buy towards the low of that range. So the ideal scenario is going to be making sure we buy as close to that low here. So we'll wait for it 1, wait for it 2 if we can get that trap low, a little trap on that, right? Trap patterns, one of my favorite setups is called a trap pattern. Again, if you join that free trading class I talked about earlier, right? Grab that information icon in the upper right-hand corner, join that free trading class. We'll talk more about trap patterns in that free trading class, but that's a great way to do it, right? Now we get the sellers trying once, the sellers are trying twice. We're still buying at the low of that trading range. That way we're not, chasing after things and going back up, right, to retest the high. Okay? So that's the plan if we go much lower or if we kind of stay inside of that range. I really want to try to buy the low of that range. Now, how would we sell off the high, right? Let's just say, for example, that we do get this market back to the highs here now. How do we sell off that high? Well, remember, it's a bull market. So in order for us to sell in a bull market, we're going to let those buyers try once, let those buyers try twice, right? Let them try once, let them try twice, and then we can, right? Then we can look for that sell back down. This is always one of the hardest parts because you're in a range and you don't want to be buying the high of that range, right? Do not try buying those highs, right? I want to sell the high of a range. But because that momentum is so bullish, it's difficult for me just to sell the high because you're going to see lots of buyers that'll be trying to buy that first pullback. So wait for them to try a couple times, right? Wait for them, let them try once, let them try twice, and then we'll sell going back down into that range. Now, what would the scenario look like for us to break out of this range, right? At what point could we start buying this market as it goes higher? Well, remember, we've got that trading range here. And so you take that range and you copy and paste it up, and there's your range expansion. So 29 and a quarter should be considered major resistance. So if I'm going to try to take a breakout, I'm going to want to see it go up, pull back, and go. It's going to really have to get through that 26, 29, right? It'll be the 1, it'll be the 2, and the 3, right? 1, 2, 3 breakout. We talked about that earlier. Once I have that 1, 2, 3 breakout, mark up that high, mark up the new channel. That will give me, right? That will give me my sweet spot, right? And of course, I'm looking to buy off that low, right? Looking to buy off of that low. That's where, right? That's where I want to wait to buy it. I don't want to try buying this first pullback. I don't care how strong the move looks, right? Because it's a range. We oftentimes see these ranges will fail, right? They'll fail off that pullback, right? They'll fail off that pullback and collapse back down, right, into that trading range. So be very careful buying breakouts. I do want to get long off of this low. I want to get short off the high. I can be a lot more aggressive buying off the low. I've got to wait for those nested 2 tries and those traps, right? So we go up, 1, 2, get that trap and sell it, right? 1, 2, get that trap and sell it. That'll be a whole lot more reliable trade, right? Selling off that high. And same thing goes, right, for the lows here, right? We got to break through that 2609. So we got to go 1, 2, 3, find that new low, find that new channel, and then we're going to look to sell, right, off the top of that channel. Target, of course, at that point, be back down to retest that low. Okay, stay out of the middle, buy those lows, sell those highs, be very patient trying to sell those highs because, again, right, it is very much a bull market. Let's keep going. Over here now to the Nasdaq. Now the Nasdaq, I know the Nasdaq looks like a Christmas tree right now. There's all these colors here on the chart, but there are 3 basic clues on the Nasdaq right now. One is the bear momentum. You can see the market going lower here, right? What is a bear momentum market tell us? It tells us sell at resistance. But wait a second though, this isn't a trending environment. This is a range. Pretty weird looking range too, I might add, right? Not a real interesting range there tonight, but it is a range. You can kind of see how it goes up, trades around there, goes up, comes back down in. So we definitely know we have a range. Most important clue on this range right now is this pendulum swing. Now, pendulum swing, we didn't talk about this on the previous 2 charts, but the amount of the move above the range, right? The amount of the move above the range oftentimes becomes the amount of the move below the range. So I'm anticipating that this market's going to want to go a little bit further lower, right? Because that momentum as it carries off that pendulum swing. So I take the original range, I mark up the amount of the move above the range, and I want to bring it down, right, and use that low down there. So that's our key level of support here, right, at that 66, we'll say 37 area for that pendulum swing. Now the pendulum swing is very much just a guide, right? Don't hold your breath for the exact pendulum swing. As long as you get within striking distance of it, consider that to be good enough. Then we've got one more big important clue here, and that is this resistance trend line coming down. Now this resistance trend line coming down may not be very important right now, but later in the session, we're probably going to be able to use this now for a buy going back up into that trading range. So range bound market, very strong bear momentum to it right now. So we've talked about this in a couple different ways here so far, but what does the range tell me? The range tells me to buy low, right? What does it tell me? It tells me 1, find the range. 2, find the bias. Is there a bias on this range? There is. It's a bull bias. So that bull bias would tell us to buy below the low of that range. Okay, number 3, find the range expansions. Now this is a relatively narrow range. And so with this being a narrow range, I tend to go 2 deviations. 1, 2, 1, 2. Does that make sense? Right? If it's a regular range, a range that hasn't missed a meal in a while, right? Nice fat and healthy range there. Then we'll use 1 range expansion, right? But if it looks like it's a supermodel, it's a supermodel range, right? It hasn't eaten a big meal in a while, right? It's a little tiny range there. When I have a small range like that, I'll use 2 deviations. Okay? So I've got those 2 deviations down. And then, of course, I've got that pendulum swing, right? The amount up, the amount down. That's where that final 66.37 comes from. Okay, so I want to buy low, but I've got this bear momentum right now. So how do I absorb a bearish momentum move? You got it, 2 try, right? Now, it's not your regular 2 try, it's your nested 2 try. So as we go lower here, all of that momentum, I'm going to look for those bears to try once. I'm going to look for them to try twice. And I'm going to look for a buy going back up. Now you can see why that trend line is so important, right? Because now, hopefully, we'll get those sellers, right? We'll try once. Those sellers will try twice. And this, again, is just my illustration right now. This may be lower on the chart, right? This may happen down here tomorrow. Okay, but I'm just illustrating right here for now, right? So this could happen at any, this pattern I'm drawing up could happen at any point down here. It really doesn't matter. And like I said earlier, keep it going, right? Because the bigger the move outside the range, the bigger the move back into that range, right? Once those sellers realize they're in a range-bound market. I'm looking for those sellers try once, let them try twice, and then this was that kind of 2-legged pullback, right? That little 2-legged pullback pattern. You got that 1, you got that 2, and then we go back in, right? You could also call this a nested 2 try. But the moral of the story is, right, the point I want to make is that the range tells me to buy the low of the range, but momentum is too bearish right now. So it's trade account suicide just to hit the buy button. What I need to do is, right, is I first need to see this, let them finish the move, let them try once, let them try twice. As long as I can get those sellers, right, as long as I can get those bears trying once and then trying twice, and of course, we'll go over all the rules to this tomorrow in the trade room, then I can look for that buy now going back up right into that trading range. All right, guys? So watch that trend line. I'm going to try to use that trend line here tomorrow. Now, another really challenging part of these types of ranges is if we get stuck in the middle of them, like we spent a lot of time today earlier in the session. So if we just happen to run back into that range and get stuck inside that range, it's going to be a little bit frustrating, a little bit difficult, but the most important thing will be to sit on hands, right, and don't try to force things inside of that trading range. So let me get my act together over here, get my Bob Ross skills going a little bit further into the future here. And of course, if we do end up back inside that range, right, if we do end up back inside the range, then we know we're pretty much balanced. And the next objective now is going to be to make sure we use that 2 try rule, right? 1, 2, back up in, or 1, 2, back down in. You really got to be careful when the ranges are really narrow like this, because there's no money to be made inside those ranges. You're much better off getting outside of the range, 1, 2, and then back up. Or getting outside the range and then 1, 2, back down. That nested 2 try. And again, if you want to learn the different types of this 2 try rule, right, different types of 2 try failure patterns, I put that link up here earlier. I want to remind you, grab that information icon in the upper right-hand corner, or hit that big red button right below the video tonight on our blog here at Sideways Markets, and you can learn all about, right, those 2 try failure patterns. Now, what does a breakout look like? Breakouts are going to be a little bit tough on this one because that pendulum swing. So until we get through that pendulum swing, I really can't say we're broken out yet. I really can't. Until we can get through that pendulum swing, because I'm telling you right now, guys, we might see this thing run lower, sit here for a while, right, and then find its way back above that trend line and give us that buy going back up. That could easily happen tomorrow, late in the morning, early in the afternoon, if we just kind of run lower and stall out down there, right? So I really can't try to be a seller until I can get and clear right below that 66.40 and change or so. That way I've got myself clear of that pendulum swing. But don't underestimate the power of the pendulum swing, right? Because that pendulum will swing, right? That swing up, it'll swing down. We saw it earlier this week on crude oil and the gold markets, and we do expect to see a little more of that here tonight. So as we finish up the move lower to finish off the pendulum swing, right, get that trend line coming down. Then if we push through it from there, right, if we start seeing it push through from there, perfect, right? Grab that new hidden channel, and then we can start getting serious about trading short off that new channel. But really, the farther it goes lower, the more we're going to want to buy this market, obviously with the right opportunity, with the right pattern. I'm not going to buy it just because it's down inside the battle zone. I'm going to wait for the 1, I'm going to wait for the 2, and try to make sure I get back above that trend line for that buy going back higher. Okay. Now, another thing you want to keep in mind for tomorrow is, and this happens all the time in the Nasdaq, right, is if we see this thing just blitz, right? If it just blasts higher. Won't be the first time or the last time the Nasdaq does it to us. If this thing just starts ripping higher here, right, it's not pulling back. It's just trucking, right? This thing is ripping higher. If that's what happens, okay, don't forget, we're probably going to see a pullback for a second leg. Because remember, anytime we see a strong move in one direction, right, we're probably going to see another leg. Now, the key is to get that before we get back up to retest these highs. So if we come out tomorrow and we see this thing just ripping higher here, right, what I'm going to do is I'm going to try to find like a hidden channel back here, right, and try to find a pullback to buy that, right, to buy that move. But again, it's got to be a real strong move. Okay, and you'll know it, right? The Nasdaq, it'll be bull candle, right? If we come in here and we just say bull, right? Yeah, that's your cue now, right? Find that hidden channel. We'll go to a faster time frame and find that hidden channel and we'll buy that pullback just to get that next leg up. Then once we get up there, then we'll wait for the 1, the 2, and we'll sell it back down. Right? So do you see what I mean here? I'm going to look to get into it if I can see that blast higher, right? But do not be buying up here at these highs because, again, you've got a major level of resistance up there. You don't want to be buying the high. We'll gladly then look for the 1, the 2, and we'll sell it back down into that trading range. All right, guys? So pretty ugly chart in the Nasdaq. I think the biggest threat for tomorrow is getting stuck back inside that small range. But other than that, though, I want to buy the low. I want to sell the high. It's the Nasdaq, so I'm obviously open, right, to anything that starts ripping higher, lower, right? And we'll see how the day goes tomorrow, right, or what the price action looks like. And we'll see you guys tomorrow, of course, in the trade room at 8 o'clock Eastern time. Now, how about some gold, right? Gold behaving very well here this week. We got a range-bound market here on gold. 3 big clues. 1 is the bull momentum. 2 is that trading range, and of course 3 is that resistance trend line coming down. Now, what does a strong move in one direction tell me? It tells me we're probably going to see another leg. The problem is that this particular move is right at the high of that range, right? Speaking of range, what does a range tell me, right? There's my trading range. Right? And again, this is a meat and potatoes range, right? This isn't one of those little, skinny paper thin ranges, right? That never eat breakfast in the morning. This is one of those well-fed ranges. It's a full-size range. So we take a 1 range expansion up, right? A 1 range expansion down, right? We use that range expansion, right? What does the range tell me? First, find the range. Second, is there a bias to this? Not that I can see. I don't see any directional bias on this. Third thing, what does the third thing tell me? Right? Range expansions. We got the range expansions. And then number 4, what's the fourth one? Buy low, sell high, avoid the middle, and what? Fade the breakouts. 2-try rule, right? 2-try rule. We go down, 1, 2, back up. We go up, 1, 2, back down. We go down, 1, 2, back up, right? We go up, 1, 2, and then back down. Or maybe what we can do is we can use this trend line to our advantage, and we can look for that nested 2-try. We go up, we got 1, look for 2, and look for that sell back down again. That's the goal right now, right? The goal, of course, to buy low, sell high, and avoid that middle. Now, we got that trend line coming over, right? That's the big clue here, right? This is the same trend line from last night's newsletter. We've got that nice, strong trend line coming down. They're trying to hold it, you can see. They're trying to hold it there as support, but nothing concrete just yet. Most important thing right now, though, is we've also got a little falling resistance trend line there. That one looks beautiful, right? So now we've got 2 levels of resistance to work with. Problem again is we've got a range-bound market, but it's a bull momentum. And so if I want to be a seller with a bull market, I've got to wait for them to try once, try twice, and then I can start selling back down again. So I'm looking for that 2-try failure. This would be a nested 2-try because it's got that strong bull momentum, right? That nice strong bull momentum. So nice, easy pattern there. All we need right now is to get a little bit lower. Got that strong move up. We got the 1. I'd like to go a little bit lower because, you know, buyers, they're going to wait to buy the 382. They're going to wait to buy the 50% pullback. You know, let those Fibonacci traders, let them buy that next one, and then we'll look to sell right into their stops and drop this puppy back down right into that trading range. Now, once we get back down to the low of that range, remember, don't try to trade the middle, right? We're staying away from that middle. Once we get down to the low of that range now what do we do? Well, now we look for that 1, that 2. Let those bears try once. Let them try twice, right? That now tells me where their stops are. I can look for the proper signal to buy into their stops. And then, of course, I can look for that pullback going back up into that range. This is, of course, not drawn to scale, right? So it's down 1, 2. Look for that failure. That's the failure pattern, right? Failure pattern, of course, right, as it breaks above the high. And then, of course, now what we'll do is we'll grab that hidden channel and we'll look for that hidden channel pullback. Coming off the moving average, coming off that rising support, using that prior swing, that's a sweet spot there for that pullback setup, right, as we go lower, right? Now, also, too, don't forget possible 2-legged pullback, right? 1, 2, 1, 2, back up, using that trend line, right? Using that trend line as your guide. So plenty of ways for us to buy off of this low. I want to sell the high, right? 1, 2, back down. I want to stay out of that middle. The middle gets really nasty. And then as we go lower, 1, 2, failure into pullback, going back up to retest the high. And again, I'm just simply drawing the chart right now. I want to show you hundreds of examples of real patterns that we find every day in our trade room. And to do that, I'm going to give you that free trading class. Again, grab that free class in the upper right-hand corner, the big button right below the video tonight on the blog, and I'll see you on the inside. Now, is there potential for this thing to go higher here? There's always potential, right? There's always potential. It's not probable, but it is possible, right? So what if we do break higher here? This could easily turn bullish real fast, right? Real strong move up. If we can see this market trucking above that 1296 up here, I'm definitely thinking it's time to buy this market. So what we'll do is we'll find that new channel and we'll look for that pullback. Now, honestly, be very honest, usually what happens is when we get this leg higher, usually this leg higher is the one that sets up for that big channel, for that new channel, right? So watch out for a new channel on this leg higher, right? Does that make sense, right? So we'll find that new channel there and we'll buy that pullback from there. All right, guys, be very careful. Don't get too wrapped up in trying to buy high up there, right? I know it's like a pullback to that support trend line, but just it's still very aggressive until we get through that 1296 area just because of the range and that range expansion. All right, guys. So again, got to get that strong move through. Then I'm happy to be a buyer going higher here. Got that big round number at 1,300. It'll probably be on our radar. But again, you really got to see another big, strong leg higher here and push out of that trading range. So we're buying low. We're selling high. We're going to use that 2-try rule, right? Nested 2 tries, full range 2 tries. And again, we'll put this together tomorrow morning once we know some more on the chart. And then wrapping up tonight here on the euro. Boy, euro really looking pretty quiet here tonight. 3 big clues in the euro. One is the bear momentum. It's pretty easy to see here this market is overall bearish. It's definitely not a bull market. We can easily see that. What does a bear momentum market tell us? It tells us sell at resistance. Where is resistance? Well, I've got a trading range here, right? Trading range tells me 1, find the range. 2, find the bias. 3, add those range expansions, right? This is one of those Diet Coke ranges, right? Very small, very thin, right? Add 2 range expansions. Not a very well-fed range, right? It's a narrow range. When it's a narrow range, add those two deviations overhead, right? So once we have the range, bias, range expansions, and then what else? Buy low, sell high, avoid the middle, fade the breakouts with the 2-try rule, okay? Now, once we know we get that bear market, I know now I want to go up, use that 2-try rule, 1, 2, and back down again. And you can see a good example of this, right, with that pendulum swing. Pendulum swings below the range, pendulum swings above the range. So this area up here, right, that's where I'm looking to look for a short, right, as we go back higher. Again, pendulum swing, it's a ballpark, right? So I would say anything around this area here is going to be right for the pickings for that pendulum swing. And then, of course, we'll use the right pattern for this as well. And then I think the real big clue here tonight is the round number. You know, the euro has made it very clear to us. It loves round numbers. It's been doing that for a few months now. This is not going to happen every time. You know, I realize that Baby Pips tells you to use round numbers and everybody wants to put a lot of attention to round numbers. But here's a very simple rule when it comes to round numbers. We only use round numbers when it's obvious the market is consolidating around one, running up and consolidating around another one. That's the only time you want to pay attention to round numbers. Okay, as a rookie, it's easy to want to use everything, right? I got round numbers, I got quarter numbers, I got pivot points, right? I got Fibonacci ratios. You put too many lines on your chart, and what's going to happen is you're going to have so many levels on here, you're not going to know what's what. And we have to strip that stuff off, right? What makes a true professional is they know what's necessary, nothing more and nothing less. In fact, I'm sure there probably are a lot of very wise people, wise, experienced people that would say the best trading happens when it's less, right? The fewer the levels you have on your chart, usually the more productive you're going to be as a trader. Now, get off my soapbox for a second here. We've made it pretty clear that they love these big round numbers, right? The Euro's made it pretty clear to us the past few months. They love the big round numbers. Hasn't always been that way, and it won't always be that way in the future, right? And we talked about last night how I was looking for that, right? For that trap, right? That trap low to go back up to that big round number. We got the trap, right? We got the quick little first target on it, but it never rallied back to that big round number. Rejection. So if we're rejecting that round number at 15,000, where do we think this market may be going next then? Probably 14,000. If we rejected the idea of going back to retest that big round number 15,000, something tells me this market might gear up here, right, for that round number push down to 14,000. So we definitely want to be open for that tomorrow. We'll know what they're looking for if we get it. Right now, though, that's very much a dream for those Euro bears. So bear market, trading range. What does that tell me? It tells me sell off the high. So how do I get that sell off the high? I want to go up, one, wait for the second try, and then we'll sell it back down. Now remember, there's a lot of variations to this two try, right? So one example would be a one try, a two try. Then we see, of course, stops are hanging out right below that low, and I can sell right into those stops. That will be the two try failure pattern. Okay, your sell is right with the signal candle below that low. From there, don't forget, we don't want to chase after it going lower, right? I want to find that new low, mark up that high, and I want to sell off of that high. Remember, I always want to sell at resistance. I don't want to chase the market low. I want to sell at resistance. Okay, so that's one option on the euro. Another option would be we really blast higher. Right, we blast higher, and again, keep in mind, we'll watch for this on a faster time frame. This is just a 2,000 tick chart. Tomorrow morning in the trade room, right, we'll be on that 377, 610 tick chart. You'll learn more about that in the free trading class that I keep mentioning right here. Now, if we get a big blast higher here, then we look for that slight variation, right? That one, that two, and then back down, right? That slight variation, one and two. When that momentum is really strong going up, I'm not going to sell into it because a lot of times strong moves will give you another leg. Okay, and if we do get that, right, if we do get that 1, 2, we can sell back down from there. But that also opens up another discussion. If we do get a strong move up and they can hold that pullback to the moving average, right? If we get a strong move up here and they hold that pullback to the moving average and they blast higher, what is that? It's a 1, 2, 3 reversal. Now we take this. We take that, right? And at that point now, don't forget, we've got that trend line coming down. We talked about that last night in the newsletter, right? We can use that trend line as well, as long as we get that nice big run, right? Nice strong move, just crush it right through that pendulum swing, right? And keep on going above that trend line. I'd be happy to be a buyer on this if we can get the right signal once we get through it. All right, but I'm not going to try to buy that first pullback, because that first pullback could easily fail and we're going right back down into that trading range again. So that covers the move higher here. Now, if we sit back in the middle, remember it's a very narrow range, so stay out of the middle. Don't fiddle with your middle, as Mama says. And then, of course, what if it goes lower? Right? If it goes lower, now we're bearish, but we're at the low of this range. So what do? Nested 2 try, right? 1, 2, back up, right? 1, 2, back up, right? Let those bears try once. Let them try twice. Once those bears try twice, right? Once they try twice, we can then look for, if we can get a trap, right? Or 1, 2 off the trend line here, and then buying back up into that trading range once again. All right, guys? And then what would it look like here for a successful breakout? What would a breakout look like? You got it. 1, 2, 3, right? Remember, it's got to really push. 1, big move down. 2, pull back to the moving average. 3, break off the moving average. Mark up the low, mark up the channel, right? And sell the high of that channel. Where's our target? Round number, 14,000. Again, that's going to be a big milestone right here for those sellers. All right, guys, looking good here for tomorrow. Don't forget, we've got some major news on the schedule tomorrow morning at 8:30 Eastern time, so keep it close to the vest. And again, as I mentioned earlier, right, 9:30 to 11 o'clock has been the sweet spot lately. So make sure you're there early. Get your charts all prepped up with me tomorrow morning in the trade room, and of course stick around for that, right? For that late morning push, which we've seen a lot of in the last few weeks. And don't forget, right? Every morning we open up our trade room 8 o'clock Eastern time with all of our advanced members. I would love to see you there with me tomorrow morning as a member. If not, don't forget, as part of our free trial, you'll get a free pass. Come out and join me as a guest in the trade room to learn more about how the strategy works. As part of that free trial is our free trading course, which will teach you all about the strategy itself. And then don't forget, we've got great beginner, intermediate classes as well. If you're a brand new trader, our beginner class is a great place to get started. Build that firm foundation, and then we'll build your career on top of it with our intermediate and advanced classes. You are always, always welcome to pick up the phone and call that toll-free phone number. You're always welcome. Hit me up on live support, right, and ask me questions there. And as always, I really appreciate you being here. I know you guys have a lot of other YouTube channels you can be tuning into every evening. I know their jokes aren't as good as mine, right? I know they're not as good of a comedian as I am, right? But I do my best. So I appreciate you guys being here. I know you're busy people, so I value your time. And so on that note, we'll wrap things up tomorrow morning, 8 o'clock Eastern time. If I don't see you guys tomorrow morning, come back and see me again tomorrow night. Right, I'm sure it'll probably still be raining out there tomorrow as well. We need it. Beautiful time of the year here in LA. But in the meantime, be well out there. Be nice to each other, will you? And be here next time. As always, we'll see you guys tomorrow. Be there. Adios, amigos. Bye-bye for now.